Hello everyone, I'm Jackie. Welcome to Interviews with Crypto OG, produced by CoinWacademy. In this episode, we have invited a heavyweight guest in the industry, Firex. Firex is a senior analyst specializing in blockchain and macroeconomic fields. Our topic today is the importance of macro policies and on-chain data in crypto trading. First, let's ask Firex for a brief introduction.
Hello everyone, I'm Firex, working on macro data and blockchain data on Twitter.
Great. Let's dive into our first question. Bitcoin has always been considered a risky asset and sometimes is a safe haven asset or digital gold. Sometimes it shows a strong correlation with the stock market, while other times it's the opposite. So, many people have doubts about how to define Bitcoin. From your perspective, what kind of asset is Bitcoin exactly? What is the relationship between Bitcoin and macro policies? Also, how do you see the overall macro situation in the crypto market currently?
As Jackie mentioned, BTC itself has a duality. It possesses attributes of both a risky asset and a safe haven asset. Let's discuss the safe haven aspect first. We all know that Bitcoin's price fluctuates significantly. Its safe haven property does not lie in the price risk itself, unlike gold, which is known for its store of value. Bitcoin's safe haven characteristic primarily lies in the acceptance risk. Bitcoin is very convenient to use for acceptance and can be exchanged for the required currency in any country, not limited to the US dollar. From this perspective, BTC indeed has a strong acceptance value and can be considered as a safe haven asset. Currently, BTC is primarily held by high net worth individuals who allocate more BTC to their portfolios. For these high net worth individuals, they are not concerned about short-term price trends. What matters to them is the ability to convert their assets into cash or fiat currency when needed. Thus, we can understand that a significant portion of long-term BTC holders belong to this group, and their interests are aligned with high customization holders who hold more BTC. So based on this data, we can see that in certain asset amounts, BTC is considered as a safe haven asset for certain individuals. In the case of a certain amount of assets, BTC is a risk-averse asset for some people. For the definition of a risky asset, it is better to explain that after all, the price of BTC is floating. Although we stretch this time to see it belongs to a growing trend. But if we look at it according to this cyclical, especially now BTC is relatively speaking, are at the bottom of a cycle, that is, the magnitude of the decline is still quite large. However, with such a significant drop, it is difficult to say that BTC is a stable asset. As for Jackie's question about BTC's current position in the overall risk market, it depends on users' trust in decentralization. BTC may be a good attribute for preservation or exchange of value in the decentralized space, and it is increasingly popular among users. Of course, we also see that since April, with the rise of AI, there has been a significant increase in other investment opportunities. At this point, more users believe that their assets are appreciating rather than aiming for asset preservation. As a result, we have seen more US dollar funds exiting the crypto market, including some outflows from BTC. These funds may have entered the technology sector. Secondly, it may be due to the US debt crisis. Many people are willing to put their money in US bonds to seek a more secure hedge, rather than choosing the more volatile risk of BTC.